Hello, dear everyone. Very happy, glad, excited to see and have you all here because today is a special day for the whole world and especially Dukascopy research team because in about 15 minutes, even less, will be not we, but the ECB rate announcement is going to happen. Or not, we'll definitely will find this out definitely as you can see, we have prepared, we have divided our today's webinar in three parts. We're going to discuss the fundamental analysis on the Eurozone, thanks to Eugenia, expectations from major banks and economists, by your loyal friend here. And last but definitely not the least is the Euro technical analysis and the anticipation of a Christmas gift from Mario Santa Draghi or Santa Maria Draghi. Well, definitely you can pick up the best option. And yeah, without further ado, let's welcome Max on the, no, sorry, let's welcome Eugenia. Eugenia, of course, on the whiteboard.
Hello everyone. So yeah, I'm gonna start with the fundamentals from the Eurozone. So it's not surprise to anyone that the Eurozone economy has been faltering for a while, and in the third quarter it slowed as exports to large developing economies weakened, and thus adding to signs that the ECB is likely to act today. The slowdown was led by Germany, the currency area's star economy and exporting powerhouse. Also, Italian economic growth eased, and there were also fresh contractions in Greece, Finland, Estonia, while Portugal's economy stagnated. Overall, GDP of the Eurozone was just 0.3% higher compared to the second quarter and 1.6% higher compared to the same period last year. But anyway, growth was aided by rising consumer spending as households were able to use their savings from lower energy prices to spend on other goods and services. However, the major headache for the European Central Bank is definitely inflation, which has been benign and remained unchanged in November, staying far below the ECB's targeted level of just below 2%. And according to European Union's statistical agency EURUSD, the broadest measure of prices for goods and services was 0.1% higher last month compared with November 2014. The annual rate on inflation has remained below 0.5% since mid-2014 and has not yet benefited from a new stimulus program initiated in March. That's why there are several options for the ECB to consider today, and I would like to name them and to describe in detail. So first of all, the ECB may extend the QE program for longer. You know that the ECB's 1.1 trillion euro QE scheme was announced in January this year and involved using electronically created money to buy bonds. The current phase of QE is due to finish in September 2016, but Draghi has always said it would continue until we see a sustained adjustment in the path of inflation. And given that inflation is just at 0.1% in November, Draghi could shift that deadline into 2017. Another option to consider is increasing the scale of monthly bond purchases. The ECB could increase the value of the government bonds they buy each month from the current 60 billion euros a month to more than that. However, some analysts argued that there are risks that the supply of bonds is not big enough to accommodate a big expansion. So Draghi could also widen the scope of the bond purchases to include riskier asset classes. The third option is to cut the deposit rate. So the ECB already pays a negative deposit rate of minus 0.2% on reserves held at the central bank. So it means that the other commercial banks have to pay to the ECB in order to deposit their money there. The ECB could cut this rate further, which some analysts think could be as low as minus 0.4%. And one more thing to consider is forward guidance. So Draghi is renowned for using carefully honest statements to direct the market, most memorably when he promised at the height of the Eurozone crisis in July 2012 that he would do whatever it takes to safeguard the single currency. He could use the similar dose of verbal reassurance today to convince investors that the ECB will not let the economy slide into deflation. And finally, the ECB could do nothing at all. However, just few analysts are betting on it. And everyone thinks that they will act today. So now I guess it's time for me to wrap up and pass over to Polina. Am I right or am I right?
Definitely right. All right. Once again, so whoops, sorry, I've lost myself in the cyberspace again, just like Dog Val likes to call it. Okay. Yeah. So basically, we're going to look closer on what do major banks around the world expect after and on the ECB rate announcement decision and discussion. So basically, you have over here a couple of comments from the major bank, and this interesting table, which I find in particular was provided by the UBS. Here you can see the likely rates market moves according to a variety of possible ECB policy announcement. And while you guys are getting more, definitely more closer and reading it thoroughly, I will discuss other bank expectations in the in particular. So we have Swedish SEP, Carl Hammer, chief currency strategist, saying that when looking at monetary policy, you're really dealing with a moving target with regards to central banks. An announcement by one bank has implications for others, and we definitely know what that means because we have also saw the talks from the SNB and the Fed, what will come next, what will happen with the euro Swiss franc. We have a comment from Shisuke Yamada, who's been chief FX strategist, and Merrill Lynch says that investors are definitely waiting for some action, and we don't know the currency market reaction until the decision comes out. However, they think the surprise is needed to bring down the euro immediately below $1.05 dollars, according to Merrill Lynch. And CD Group Global Markets comment that some of the currency market expect the ECB's easing steps are fully factored into, though they expect the euro would temporarily bounce back after the meeting, according to Osamu Takashima. And he also reiterates that currency option-related position suggests that some investors remain well prepared for a euro rebound, making the euro more likely to weaken following any ECB steps to ease. According to Aurelia Algorite, who's been a senior analyst at Nordea, she says that the countries most willing to follow the ECB's move are those which hold exchange rates to be key policies, such as Switzerland and Denmark. Norway has not been concerned about its currency. Societe Generale follows up that they do not. Yeah, they also were discussing with the U.S. economy in a more robust state and comparing those two monetary policies and say that it's difficult and dangerous to draw parallels because central banks are in a completely different world now. And they also expect a broad set of measures, including 10 basis point deposit rate cut, more asset purchases from 70 to 80 billion euros, including also corporate bonds, along with other measures. And they remain skeptical that this will be sufficient to meet the inflation target of below but close to 2% over the medium term without more support from economic reform. And correct me if I'm wrong, but I need to pass the floor to Matt. Or do I have some couple of times? Yes? Yeah, I just wanted to drop a last comment from the UBS. They tell what to expect from euro-dollar market moves, and they say that if the ECB delivers more easing than markets are pricing in, the euro low in euro-dollar is likely to be tested, though they do not see attractive risk or rewarding to be short euro-dollar at current levels. And the potential for QE2 to move the euro is less than was the case in QE1, given the different starting points for the currency and better euro area growth now than earlier in the year, according to UBS. Yes, thank you very much. And Max, the floor and stage is all yours.
Thank you very much, Polina. Hello, everyone. I hope you have a great day so far, and you will have a great day after these crucial ECB decisions in just 3 minutes from now, and after the press conference of Mario Draghi in 45 minutes from now, which we are going to discuss as well. So the technical analysis today is not that usual as always, because we're just following expectations, and the expectations for the euro actually are quite bearish, especially in case the European Central Bank surprises markets and decreases the deposit rate to 0.4%, so to minus 0.4% or minus 40 basis points. Such a move, by the way, is expected by Commerzbank, Danske Bank, and Lloyds, while actually still the majority of market participants see the deposit rate decreasing to minus 0.3%. Also, there were some speculations this morning. Some commercial banks and other financial institutions said that the ECB can even lower the key interest rate, the key main refinancing rate from 5 basis points possibly to 0, so just a move down by 5 basis points. So it's up to them to think if it makes sense or not, but it still would be interesting to know. But the key watch is, of course, on the deposit rate, and we are going to watch the first initial market reaction from the euro, hopefully from the euro-dollar currency pair. Hopefully, we will see the market reaction in some 1 minute and 15 seconds from now. Actually, concerning forecasts, which were already discussed by Eugenia and Polina, Goldman Sachs, for example, said that the European Central Bank, their move will probably decrease the euro-dollar exchange rate down to 103 in altogether today, in case the Mario Draghi also gives a bearish surprise to the markets. Okay, I guess we have just 40 seconds to go until we're going to know the rates, the decision on rates from the European Central Bank, and as I have just said, hopefully we will see the market reaction from the euro-dollar currency pair. It would be strange not to observe any reaction from this currency pair. As you can see in the 1-hour chart, the euro actually has moved slightly higher in the past couple of minutes, not even slightly, but by some 80 pips to the upside, but since then, and it has cooled slightly down. But it's true that more reaction we can await in some 45 minutes from from now, when Mario Draghi actually speaks to the public. We see some slight volatility actually in the euro exchange rate, but I think we're still waiting for the numbers, and as you can see, the euro is moving lower, higher, higher, lower, so quite a mixed market reaction, but I hope we will get the numbers. Okay, the actual deposit facility rate was lowered to 0.3%, to minus 0.3%, of course, to minus 30 basis points. It was in line with the majority of the expectations, but still the euro is rising, and yeah, just mentioning other rates, they are unchanged, so no surprise, no move by 5 basis points down for the main refinancing rate. As you can see, the movement of the euro, it's actually very volatile at the moment, but on aggregate, in the past minutes, we have seen the movements of the euro, which amounted to, I will just measure it, to 168 pips. So it's a pretty big market reaction, but as you can see, the overall move is higher, and possibly it's because some market participants could anticipate that the ECB would lower the deposit facility rate to minus 40 basis points, because as you know, the 2-year German bonds are yielding currently around minus 40 basis points, and the European Central Bank is eligible to buy under its QE program only the bonds which do not exceed its deposit facility rate. So that's why that's where these speculations were coming from. Okay, so we have also the press conference in 45 minutes from now, which we are going to watch very closely for some hints and some real actions from Mario Draghi and from his team. We are going also to follow the Twitter account actually of the European Central Bank, and we are going to provide you with all the insights and all the comments, all the quotes from Mario Draghi in the chat section, so you will see it in full, and we will also continue to track the development of the euro-dollar currency pair, and we will see whether Goldman Sachs was correct in predicting that the exchange rate is going to drop down to 103 by the end of today. At least not by the end of today, but probably in the first 1 hour, let's say, after the Mario Draghi's press conference. Okay, so stay tuned, and we will be back in, I guess, some 35, 40 minutes from now. But for now, thank you very much for listening, and see you soon.
Yeah, guys, by the way, stay tuned because we will have a super webinar in about 10 minutes by Doug Dow on Algo Wars from North America Live. See ya. We'll be here. We're not going anywhere.